This PowerPoint presentation of the Magna Carta loophole bank effect of public losses in private profits for my Member of Parliament follows Federal Court of Canada advice Canadians should complain to their representatives about trillion-dollar cost of money behind tax credit losses hidden from the Treasury, not reported in the budget, which is gullible taxpayer law. In case of twice paid tax credit deficit dollars, the budget will balance itself. My name is Tony Crawford, and my tax fraud whistleblower submission to the Finance Committee recommends a Bank of Canada solution to twice-paid tax credit windbill conversions, how bank principals monetize tax scams for the rich. Panama Papers reveal onshore tax shelters and offshore tax havens where rich people who profit from financial piracy stash plundered loot around the world. This is a documentary of Canadian interest in the Magna Carta loophole at the heart of the 2011 William Creme versus Bank of Canada case that alleges breach of no taxation without representation financial harm in the budget process that the Supreme Court of Canada struck down in 2017 with judgment that taxpayers must lobby their members of Parliament to change the law. Canadian money is a loonie, which is coined in the same billion tax dollar question in the 2016 United States election.
Maybe he doesn't want the American people, all of you watching tonight, to know that he's paid nothing in federal tax. He didn't pay any federal income tax. So if he's paid zero.
The wealth of our middle class has been ripped from their homes and then redistributed all across the world. But that is the past, and now we are looking only to the future.
As far as the deficit is concerned, I do believe it is a major problem. I find that the principles of fiscal management have eroded over the years, and I would question the very nature of the business practices we implement in this country, which challenge the wealth creation concept. I believe from a personal point of view that my wealth has been confiscated. I have lots of friends who feel the same way. Any taxpayer can sign a promise to pay money for a tax credit windbill private imaginary dollar as a tax credit saver tax bill maker that a Treasury conversion reissues a public notional national debt real dollar to its holder in due course. A windbill is an 18th century fictitious bill used to kite worthless accommodation paper presented for credit at face value. The modern-day rent-seeking tax arbitrage version monetizes ABCP, asset-backed commercial paper, through taxation, and its codependent twice-paid tax credit windbill is the broken money rule. Broken money rules are made from broken money acts voted into existence by members of Parliament. In 1907, Pitman's Bills, Checks and Notes defined the Bills of Exchange Act 1882, how bankers fulfill the broken money rule. This study reviews the nemo dat quod non habet enigma that defies the logic one cannot give what one does not have, that the maker of a promise to pay a debt is money to its holder, even if stolen in the hands of a thief. Negotiable instruments differ from ordinary chattels. A rough and ready test of negotiability is tried in the question, can title be made through a thief? If the answer is yes, the financial instrument is negotiable. If the answer is no, it is not negotiable. The broken money warning is clear in Pitman's Bills, Checks and Notes. A banker must never sign a windbill. A banker must never sign a windbill. The broken money rule is rooted in Magna Carta history and Chartered Bank of England. The 1694 Bank of England was created from government policy to print money capitalized from the incorporated tax credit worth of taxpayers, bonded into service the national debt cost of money behind the first private bank public deficit economy in the world. The medieval bank system plan replaced tax-paid tally stick receipt interest-free currency with tax interest to collect for the bank that printed signed promises to pay pound coins for pound notes, that charged the rent interest cost of money for unpaid tax bills as bills of exchange to use as legal tender. Signed promises to pay money for Bank of England banknotes circulated through countrywide bank cash flows that coined gold standard fractional reserve capital movements through the bank system and revenue streams in tax budget accounts. Even today, government-thrown speeches still announce election promises in budgets after tax returns to public wealth that bond issues of unpaid tax bills continue in cash flows as money in circulation in deficit economies. Real economy, collective principle, a central bank holds a social lien on national debt tax value received, is not the same as shadow banking wind bills, which are spiritual liens on notional debt value deceived to raise credit on counterfeit, nothing received. Tax credit wind bills garnish gullible taxpayer income tax deductions that monetize fictitious bill fixed papered interest laundered for cash through tax avoidance revenue shortfalls that conceal tax evasion public debt Treasury losses not reported in the budget. Wind bill tax deductions yield interest until indebted wind bill makers repay principal owed, that nothing received to receipt wind bill holders represent signed promises to pay private notional debt, rebuild as public national debt, sued to coin Treasury losses paid twice in default. The incredible tax loophole issue is easy to fix with a universal bank transaction control number for tax revenue protection that members of Parliament may solve the problem.
It will help our tax authorities enforce tax laws and combat tax evasion.
People bank personal incomes and life savings in retail and investment bank balances where they keep track of their money. The government manages monetary policy and the central bank clears private transactions while keeping public account of national affairs for the Treasury. Double-entry bookkeeping updates credit, debit, zero-balance private cash flow and public revenue accounts across the banking system. Income tax returns provide public revenue streams that flow from private wealth in retail and investment bank account columns to public wealth accounts of money in circulation from the central bank. Tax payments in the Treasury public account is spent from the budget that tax investment codes stimulate the economy, which is the government tax credit spent business model with tax credit paid business from public cash flow in retail bank accounts. The government tax credit offset business model also stimulates investment in the economy that when thrifty people save personal income tax credits, public cash flows in private investment bank accounts. Tax credits redistribute wealth, and asset management in banking that advises profit from tax scams for the rich has become an election issue.
But imagine that someone seeking to be Prime Minister, Justin Trudeau, would casually assert and refuse to retract a statement that a large percentage of small businesses are just tax avoidance schemes for the wealthy. Friends, look around you. Here at TAMCO, there are 45 men and women building industrial equipment. Businesses like this are no tax scam.
In 2009, the government ABCP Crisis in Canada report documented the Canadian experience of the gullible taxpayer. Tax savers unwittingly signed promises to save undisclosed bank loan income tax credits into personal financial ruin and notional national debt due to the ABCP acquire-to-distribute business model behind the largest $32 billion failure of a mortgage-backed securities financial conduit in Canadian history. European Central Bank Governor Jean Trichet warned all signatures will be honoured and people must be careful.
Signature will be honoured. That is essential. That's the reason why we always said be very careful in all what you're doing. It is the system which is at stake. The benign neglect of the markets, the benign neglect, I have to say also, of the governments, individually and collectively, let the thing go.
And Governor of the Bank of England, Sir Mervyn King, grieved not enough had been done to prevent the failure of the system.
With the benefit of hindsight, we should have shouted from the rooftops that a system had been built in which banks were too important to fail, that banks had grown too quickly and borrowed too much, and that so-called light touch regulation hadn't prevented any of this. And in the crisis, we tried, but should have tried harder, to persuade everyone of the need to recapitalise the banks sooner and by more. We should have preached that the lessons of history were being forgotten, because banking crises have happened before.
This study of the broken money rule recommends a universal bank transaction control number will track otherwise imaginary improperly earned income tax credit transactions. It will position real debt in credit rating systems to safeguard financial consumers, and an aggregate zero balance of accounts across the entire banking system will report the tax credit loophole for taxpayer protection in case of twice-paid tax credit windmill conversions. A bank system solution universal transaction control number does not change the law, and so, like a banker, a taxpayer must never sign a windmill.
Never draw or accept an accommodation bill unless you are prepared to meet it whenever called upon. After it has left your possession, value may be given for it, and it is no answer to a holder for value that you are only an accommodation party. The bill has been drawn by you, endeavour to secure its acceptance before negotiating it. Non-acceptance means that the bill is dishonoured, and there is then immediate recourse to all parties unless an acceptance for honour is obtained.
We are taking an important first step toward a new regulatory regime.
Yesterday, Federal Finance Minister Jim Flaherty encouraged critics to read the panel's report with an open mind.
To think about the need for consumer protection, to think about what has been happening in the world, and to take a Canadian approach.
In the meantime, Flaherty doesn't want to say whether he expects that approach to include a court fight.
It's a constitutional challenge to the Bank of Canada and the Minister of Finance in refusing to give interest-free loans to the federal and provincial governments, which was the central reason the bank was set up initially in 1937.
The first thing that we are going to attack is regulation over regulation. It's not just in the financial markets, it's in all markets. So today you're going to start seeing the beginning of some of our executive actions to roll back regulation in the financial services market.
Financial advisor sales reps were bank-paid witness of tax savers signing promises to pay money for rent-encumbered mortgage credit default swaps. Bank agent, property owner, mortgage-backed securities dealer, commissioner of oaths, notarizes taxpayers as persons, signing promissory notes for pre-executed loans, accredited from statements of affairs for tax credits, and private net worth for undisclosed, unsigned, unacknowledged loan application dependent sales. Tax bill revenue generators bill tax savers for tax savings payments, loan cash deposits, and mortgages bill renters for rental income payments that rent loss and tax savings, tax credit interest, LIBOR cost of money cash flows in ABCP financial conduits from ABCP windmill tax revenue shortfalls behind ABCP bank windfalls.
We have a liability related to the investment as well. It depends on the structure of the deal. All I'm saying is when you buy an investment, and some of these projects, the borrower, in our case, the investor, may have a liability related to the investment over and above the loan. If that's the case, the bank would include that in the debt servicing calculation. I never saw any evidence of that. May have been.
I sent you the letter saying this is how much loans for, this is what the interest rate, this is what the payments are, and you send in 12 both dated checks. Each would have been deposited into that account and then gone to pay the loan. Yeah, there's no account number, that's correct. He didn't witness it, he witnessed
The financial advisor's
signature.
The financial advisor
Swears an affidavit and
the promoter
commissions the affidavit. That's not witnessing your signature.
The advisor
Says he witnessed your signature. And here is a copy of it.
The promoter
Commissions it.
But there's no circle of funds going through some secret account.
What happens when you sink your savings into an investment only to find a bank is calling you saying you owe them money? Lots of money. Well, that's what happened to our next guest. Tony Crawford is the author of The Perfect Sting, and he joins us in studio, as does Robert Beers, a financial planner and tax consultant who has seen more than his share of people who unwittingly became sitting ducks for the big banks. Tony, could you very quickly tell us what happened to you?
Yes, this started in 1989 when my accountant came with me with some advice to put some money into an investment for a tax-saving opportunity. And what I wasn't aware was that there was a bank loan involved with this as a secondary risk. 10 years later, the bank came to me and told me that I owed them about $100,000 based on the fact that I had signed up for an investment that was supposed to have some payback and ownership in property.
And you had no idea at all? This hit you like a ton of bricks?
Absolutely no idea. This was a total surprise to me. And when the bank called me about this, they showed me documents that I had signed, and indeed I had signed a contract to the investment provider. They're called promoters. But the investment promoter had taken my signature to a bank with a signature affidavit that I wanted to borrow money, and the money went into the investment product.
Robert, how many times have you heard stories like Tony's before?
Oh, far too many, unfortunately, but I'd say since the late 80s to recently in about 2003, quite a few, well over 200 to 300 a year.
What happens? Are these legitimate investors that come up and just have some sort of a scam, or I mean, who are these people?
Well, they're called a promoter. They have a particular investment, whether it could be a real estate piece of property, a film, or a software type of syndication deal. And in order for them to complete the transaction, they've got to have investors such as Tony Crawford. And in order to sell the security, because that's what they're selling, they're not selling real property, they're selling a security in the syndication deal, they've got to be paid. And quite often they will use a bank to assist them in the process of being paid. This was quite a large syndication deal. There was at one time listed 308 limited partners throughout Canada and the United States.
And the banks aren't held accountable at all?
Well, the banks simply are providing financing. The bank's view is this is a deal that's based upon the individual's ability to pay back a debt. The misconception, or I guess the misgivings or the misrepresentation, depending on how you want to interpret it, really comes from the promoter's point of view, where they are saying that the bank is on side, when in fact the bank really isn't on side. The bank is really there to make a loan.
Promissory note was signed and not dated. We know that. It says right on it. So it has nothing to do with the bank.
It's not signed to the bank.
Yeah. No, you signed a note directly to the bank. You signed a note directly to the bank.
We don't know anything about it. You could sign a million of those. I wouldn't know.
Nobody knows how many units are involved until you approve a loan.
I don't know about that.
You don't know about that. But what is a bank document doing with signatures from third parties?
Okay, to confirm that it was to try to get some confirmation that it was your authentic, genuine signature on the note, which is, I believe...
I mean, this is the process for offsite closing. Terms and conditions of a loan are not awareness of debt. You meet terms and conditions of loans before you get the debt. So it's one comes before the other. And to meet terms and conditions, the bank has to get the documentation. Then you meet the terms and conditions, right?
Is the acknowledgement and agreement contain the loan terms?
Yeah, the form that you signed. You signed a whole bunch of documents. You didn't know what you were signing. That's your problem. It's your problem you don't read what you signed.
The question is, if the government knew of a sleazy bank practice that tricks people into debt with tied loans based on third parties representing other people's signatures to link secret debts with retirement investment plans, would a government side with the banks to allow profiteering to continue, or would a government expose it and do something to protect people from a debt crisis?
Okay, Tony, thank you for your question. First of all, Tina.
Tony presented this situation to the NDP Riding Association at the beginning of December, and you may also have seen his highly visible van parked around town to publicise his indignation. As Tony described his experience of an identity theft to the NDP members at the town restaurant, their reaction swung from the initial denial, that doesn't happen in Canada, surely, to doubt and then horror at the idea that yes, it could, and it probably happens more often than we realise if it was allowed to go unchecked. hundreds of Canadians have suddenly found themselves responsible for millions of dollars in debt. You have to acknowledge the situation exists and then strengthen the powers of the Security Commission so they can prevent this practice.
Terrence Young.
Thank you very much. I know the gentleman who's calling. In fact, I took some time about 8 weeks ago to meet with him in his home to understand his issue and to look for potential solutions. And I've committed, if we form a government, I will meet with the new Minister of Finance and we will correct the situation and put it in legislation and stop it from happening.
Thank you. Laura Domsey.
First of all, I'd like to say that in all banks, and this is just from my personal experience because that's where I'm employed, that if you are not following, compliance and audit regulations, then you're not doing your job, and a bank isn't going to keep you around for a very long time. Second of all, if that is happening, then I believe that as soon as the government finds out about it, they would put a stop to it, most definitely. And also, I think that banks have to be, doing their due diligence to ensure that they are knowing their customer, they know the person who's sitting across from them, and that they're not doing anything that has to do with tied loans, which is also illegal. It's illegal to do any sort of tied selling. And I think that, yes, the government would definitely be against that and put a stop to it right away.
Bonnie Brown.
Thank you very much. I, too, am aware of Tony and his case. He has brought it to my attention. I have received all the papers that he has about his case, and I have taken them to the Finance Department, and I believe they ended up in the office of the Superintendent of Financial Institutions. The answer we got back over that was that nothing could be done.
That's not a bank promissory note. I'm sorry, and this promissory note in the bank's documents that we're relying on isn't witnessed either. Correct. You signed a blank promissory note to the bank, and the fact is that the purpose of this was meant to try to get some verification that they were getting your signature on the note. They did get your signature on the note.
Tell us, what steps did you take when you found out you owed all this money? And it was a lot of money, was it?
It was a lot of money, and it wasn't just once. My wife was in a similar scheme for $40,000.
Wow.
And that was totally unknown to us until the bank told me about my debt.
But what did you do?
Well, I obviously had to respond to the claim, and as the information came to me, I realized that there were third parties involved in this that I could make a counterclaim against, and that involved the accountant, that involved the actual promoter of the product, and of course the bank. And in the course of discussion, they told me that I was a sitting duck and that I would have to pay regardless, that the bank is perfectly entitled to reclaim the money simply because of the way the documentations are put together. And I had already written books in the past, and I thought there has to be a story here. So when this occurred 3 years ago, I began to take a diary, and gradually the book came together, and we're calling it The Perfect Sting.
Now, this was all legal. What they did was legal, is that correct?
I understand that everything is legal, and I have tried every angle, which has given me an opportunity to have emotional highs and emotional lows of incredible proportion. Sometimes I think I'm onto something, but I understand that the Canadian law is really in conflict with the ethics the banks promote they have. They don't have to have business ethics because the law says that whatever they do is going to be okay, and in this case they did far more than they should.
So loan, evidenced by promissory personal loan service application.
So what I can tell you is what's here doesn't matter. We don't get into the kind of due diligence that you're referring to because we're lending to you based on your credit. You can go blow your brains out, that's fine. We lend to you on your credit worthiness. On the merits of the investment, we don't look at it. Is it a good investment or not? That's not our expertise. It's what was inputted into CCAPs that matters. The bank computer is actually the credit decisioning machine. So what's inputted into the computer is what's important, not what's on the piece of paper.
The bank probably would have cut an official check to pay for the investment from the loan proceeds, but there's no circle of funds going through some secret account.
Taxpayers pay the ABCP rent-seeking tax arbitrage cost of money until ABCP property mortgages fail to roll over in default of non-performing mortgages and loans due to investment bank ABCP mortgage default swaps and retail bank court orders to collect unnumbered tied loans behind bank-acquired property and repossessed real estate. Rent-seeking tax arbitrage continues that tax-saver signed tax bills discount tax credit value from ABCP tax bill makers, sold to ABCP holders for value, resold to ABCP holders in due course, is sued in dishonor of default, that nemo dat quod non habet excepta super protest court orders, ABCP cash conversions of tax-saver signed promises to pay money made for wind bills not reported in the budget.
But there's no circle of funds going through some secret account.
Hamilton Center.
Thank you, Speaker. This petition is for potential debtors' identity validation and financial due diligence that will safeguard people's wealth and equity in property from fraudulent loan applications, specifically in cases of third-party representation using notarized affidavits by or for loan handling lawyers that may benefit themselves and/or their affiants.
To Honourable John Oliver, thank you for reviewing my tax whistleblower affidavit that I reported my role as a gullible taxpayer to the police to investigate. After 12 years in Superior Court and 6 more in Federal Court, the judiciary defers me to you about the law. I am glad in all fairness our government is closing tax loopholes, but as discussed and this sworn witness about twice paid tax credit wind bills, I still require you to represent a private member's bill for my gullible taxpayer law. Thank you, Tony Crawford.